G'day and welcome to Stocks to Watch, where we interview industry leaders about what's current in the market and try to tease out a little bit of decent information in the process. My name's John Franklin. I'm an experienced geo and your host. Today we're joined by Kenneth MacLeod, President and CEO of Sonoro Gold Corp. Kenneth, welcome to the show, mate.
Thank you, John. The pleasure to meet you.
Pleasure to meet you too, my friend. So as a background of Sonoro, you're a junior gold explorer and developer, advancing the flagship Cerro Caliche project in Sonora, which sits in Mexico. You've also got a focus on fast-tracking the near-term gold production whilst expanding your resource base through the drill bit. So you've recently had an exciting update regarding your Cerro Caliche project by securing the surface rights for your property through a lease agreement. Can you tell us what those rights cover and also just elaborate a little bit more on the terms of that agreement?
Oh, by all means, John.
Before we continue, be sure to subscribe to our channel and ring the bell to get notified about our latest videos.
Back in 2018, we signed the first of a series of agreements to secure the mining rights or the mineral rights to the Cerro Caliche concession. And these grant us all the mineral rights to explore and develop the underground and the near surface mineralization on the property. But they don't grant us the surface rights. The surface rights in Mexico are separate from the mineral rights. So you have to negotiate for access to the surface. In other words, be able to operate at the surface and drill and actually do your mining at the surface. So the first agreement we signed with the rancher that controls the area, it was done in 2018, and it was an exploration permit that we got with the rancher. It enabled us then to go and drill, and we've done that adequately with 55,000 meters of drilling behind us. And now we're at the stage where that agreement has now expired as of July the 1st. In fact, it was time to either increase the agreement to a mining license, that's the surface agreement for mining rights, or extend the exploration rights. But there's no point in doing the extension of the exploration rights because we are now in the process of moving towards production within the coming, certainly within the next year or so. And so we went ahead and we negotiated the terms of this surface rights agreement with a rancher, keeping in mind, of course, that the terms of the agreement enable us now to mine for as much as 25 years. It's an initial 12 and a half year term, and we have the option to extend for another 12 and a half years. What that gives us now is great certainty that we don't have to go back to the rancher. We don't have to renegotiate the terms of the surface rights agreement. And so it gives us a lot of security going forward as we wait for the approval of the environmental impact statement, or the MIA, as it's called in Mexico. So that it's become a significant milestone for us, and a very important part of the approval process in Mexico, because in order to get the change of use permit, we need to have the surface rights agreement signed with the landowner or the rancher in this case here. So it was a very important document for us.
Absolutely. So a necessary milestone that you've ticked off there to getting towards that mining permit. So according to this agreement, MMP, or the ranch holder, still controls 100% of the surface and mineral rights. How does this help you reduce risk on the property?
Well, the risk factor is, of course, if we had waited until we had the approval of the environmental impact statement, or the MIA, the terms may have been much more onerous than they presently are, because obviously when we initially signed the deal with the rancher back in 2018, gold was trading at around $1,300 or so, plus or minus. And so the value of the land was X at that point. Now with gold at almost 3 times as high, the value of the land obviously went up substantially. So the rancher he monitors the markets, and he's very, very experienced in dealing with miners in the various ranches that he controls and owns. So we felt it was much more appropriate for us to secure the surface rights now, because we're in the process of putting together the change of use permit, which will be done in conjunction with hopefully getting the approval on the MIA within the coming weeks, if not months.
Okay, that makes a lot of sense. Yeah, you got to get it in order so you can start getting on to the next job, basically. So now we've spoken about getting those surface rights and obviously the mineral rights. Could we now talk a little bit more about the mineralization at the property? So you've already done a PEA. Can you tell us more basically about what's the geology like in this area, and also kind of what are the PEA economics around it?
Certainly. The report that was most recent resource report was done by SRK in March of 2022. And that was followed up with a PEA by Micon and Denham Engineering in 2022 as well, actually in August of 2022. And the resource as it stands at that point in time was 440,000 ounces within the pit shells. And this was on the basis of essentially 95, 98% of the resources gold oriented. And so we ended up with getting the metallurgy tested at McLellan Labs in Reno. And the metallurgy yielded 74% recovery in the lab. And then when we transposed that onto the mine plan, we figured that a 72% recovery in the field was the best solution for us. So with 440,000 ounces within the pit shell and a 72% recovery, you end up with just under 300,000 ounces of mineable material, or mined gold. And so on the basis of a 12,000 ton per day production facility, or a heap leach, open pit heap leach facility, we end up with a 9.5 year life of mine on that basis. Now that was done once again on the basis of the PEA using a $1,600 price for the gold at the time. And it yielded, the optimum was 12,000 tons per day, and then averaging 33,000 ounces a year of gold production, which gave us a very, very healthy outcome with a significant net present value and internal rate of return. And at $2,000 gold, which was one of the variables we looked at as well, the net present value goes well over $100 million US. And so the issue for us now, of course, with gold at $3,300, it behooves us to go ahead and produce a new PEA based upon the near current gold price. So the figures start to become quite different from the original PEA. The value of the project obviously has increased dramatically. So now we're looking at the potential for taking an approach where, if you use a $3,000 gold price, for example, does that affect the cutoff grade for the project as well? And the original cutoff grade in the PEA was 0.2 grams, and so when you start unlocking the material that is just under 0.2 grams and make it productive at $3,000 gold, it significantly impacts the valuation of the resource, and B, the amount of gold that you can produce over time. And so we're looking forward to producing a new PEA on that basis over the coming months. And we're at this point in time, we've started putting together the cost factors, and of course the different mine plan, which would show an increase in production possibly, or an extension of the life of mine based upon this higher gold price.
I'm sure that pit shell will have a little bit of a boost with the gold price going up over double since the last PEA. So that's great news to hear. Are you continuing with step out drilling or things like that, or are you mainly just shoring up this resource at the moment?
I think in order to keep the interest level going in the marketplace, I think it behooves us to continue with the drilling program because right at this point in time, we've only drilled no more than 30% of the known mineralized zones in the project, which suggests to us that the potential is significantly higher than what the 440,000 ounces that have been identified to date by SRK. SRK also added another 285,000 ounces of potential within the drilled areas, but the drilling was not tight enough for them to classify it. And so it's up to us now to go ahead and do some infill drilling to hopefully achieve that extra 285,000 ounces into the pit shell model as it stands. Now, drilling going forward, I think, is important for us. We truly believe that we can, as we go ahead towards securing project finance to construct the mine hopefully in the coming months, then the other additional factor we should be looking at is continuing with the drilling program because we have to take advantage of the high gold prices because they may not last forever, obviously. And so doing some drilling to expand the higher grade zones in the property, I think would be very, very meaningful for the shareholders. And so we are planning to do that. And we hope sometime in the next month or so to start thinking about when we can start the drilling program and to what extent we can do it. And the areas that we are looking at right now are within the current pit shell, and see if we can convert some of the sterile ground within the pit shell into productive ground. That's simple enough. We know the mineralization is there, and it's easy enough to continue to add ounces and continue to make increase the classification of the resource from inferred to indicated, and maybe even measured as well. But we've been focusing on building up the resource in the inferred and indicated category to date. And so we feel it's quite sufficient for us to be in the inferred and indicated category. And so going forward, yes, drilling is a priority for us, and we expect to be able to work on the drilling program while simultaneously constructing the mine hopefully in the near future.
Great. So as far as next step is now converting over into the mining lease and starting to build, basically.
That is the next step and the important one for us. And to give you an idea of the length of time it's taken to get to this point, we submitted the environmental impact statement, or the MEA, in April of 2022, full expectation of getting the approval by the end of 2022. And of course, the previous president was not very friendly towards the mining community. And so everything froze as of November, December of 2022, and no permits were granted for new open pit mines, and in fact, mines in general. So now we're happy to note that ever since President Sheinbaum was inaugurated in October of 2024, things have changed dramatically. Mining projects have been granted. The new approvals have been granted for existing mines to expand. And so we feel very comfortable in elaborating on that and saying it's only a matter of time before new mines and new open pit mines are granted as well, granted approval as well. So on that basis, we feel that once we have the approval in place, we are projecting a 13-month period from date of approval until we pour the first doré bar. And we feel very comfortable in stating that because our team has built open pit mines in much less time than that. So we're taking it at a reasonable pace without breaking our backs and going too fast. So it'll be a very important milestone for us once we secure the MEA approval from SEMARNAT and the Mexican government. And right at this point in time, we're optimistic that it'll happen, not within years, but within months.
Fantastic. Okay, we're expecting a lot of news flow out of Sonora over the coming year then. So I guess as a question to round it out, what does this update mean as far as for current and future shareholders, and how does it make Sonoro Gold a more attractive investment?
Well, the most important element for any shareholder right now is the valuation of the company as an exploration company at this point in time. Obviously, we're not getting the value of the gold in the ground based upon our position today as an exploration company. When we get the MEA approval and we start going into construction, then the mining analysts will look at it from the point of view of what's your future cash flow? How much is it going to cost to build? What's your future cash flow? And therefore, they're able to determine what the potential for the potential valuation for the marketplace in general. And so I think if you look at some of our peers in Mexico and elsewhere where they start small, if you apply the Lassonde curve to us as you could have applied to some of these other peers as well, we're in a trough right now. We initially had the euphoria of having a very productive exploration program. The share price went up. And then once we filed for the MEA and it didn't come to pass, we went into a deep trough as a result of waiting for 2.5 years to get the approval. So now we're at the bottom or starting to climb out of this trough. And typically, once projects and companies go into production, you will see an increase in the share price, which will reflect the potential cash flow that the mine will produce. So we're at that stage right now where we feel there's only one way for the shareholders to benefit from Sonoro, and that is we go into production, and then you'll reap the benefits of cash flow. And I wouldn't say earnings per share at that time, because much of the earnings will go back towards additional drilling in order to fully expand upon the potential for the project. And we truly believe that the potential is 2 million ounces. So we have a long way to go to demonstrate the true value of this project. And at that point, we should be in a very comfortable position to develop our second project, which is San Marcial, which is 30 kilometers away from the Cerro Caliche project. And we hope to do the same kind of successful outcome as we expect to have with Cerro Caliche.
Could you use the same heap leaching facility for both of those ore bodies?
No, they're too far apart. They're by road, they're 100 kilometers apart, even though they're 30 kilometers as a crow flies. So no, you need to have the heap leach facility close by the mine. Traditionally, if you have it within 2 or 3 kilometers, you're in good shape. And that's what we've designed the mine plan to accommodate the leach pad within about 2 to 3 kilometers of the actual mining zones and the pit shells.
We're used to trucking ore a long way down in Western Australia. So, no, but absolutely. Okay, so it sounds like there's a lot of potential upside for finding and basically infilling these mineralizations that you already know are there, as well as progressing towards mining for your flagship project. So it's very exciting. Is there anything else you wanted to say in closing?
No, in closing, I think it's this news release that we put out on the acquisition of the surface rights was a major catalyst for us, because we had been very concerned about what would be the timing for securing the surface rights, and the fact that our exploration rights were terminated as of July the 1st meant that we had to move quickly in order to secure the rights for mining. And we are very, very happy to have secured these rights, because they are an essential component of being able to go into the mining phase now with the project, secure the change of use permit, which is a document that is provided by the government, and then go into production. So this is a watershed moment for Sonoro.
And for any potential investors, where can you be found, under what ticker and which exchange?
Oh, certainly. Sonoro Gold is trading on the TSX Venture Exchange in Canada under the trading symbol SGO. We're also trading on the OTCQB in the United States under the symbol SMOFF. And we're also trading on the Frankfurt Exchange under the trading symbol 23SP. Many of the German investors that we have in Sonoro trade in both the German exchanges and the Canadian exchanges. So it makes it for a very, very easy transition for European investors. And so we're looking forward to keeping them informed as we go along. And secondly, in the United States, we're seeing much more trading occurring now in the United States, and we're getting good results on bringing in new investors there. Australia, we have not tackled Australia yet, but in due course, we will do so.
Absolutely, we need a few more IPOs on the market. So come on down to the ASX when you're ready. Fantastic. Thanks for your time today, Ken, and look forward to following Sonora from here onwards.
Thank you, John. Pleasure talking to you.
Cheers.